Hi guys, I welcome you to this very interesting topic of doubtful accounts in the subject of financial accounting. So you have to understand exactly what is meant by doubtful accounts. What happens is that in business, when goods are bought for resale, then a 30 days credit line is available to the buyers, which means that they can make the payment for the goods by the end of the 30th day. It doesn't mean that they should always avail this credit line. So if a business has good cash flow situation, they can make the payment within this credit period anytime. So what happens is that sometimes some buyers may have some temporary cash flow problem, so they are unable to make the payment by the close of the 30th day, and that is how they are termed doubtful accounts. And there is an adjustment required to be made in the accounts regarding these buyers who are termed doubtful. So let's proceed and see how the adjustments are made in the accounts. Right, now let's proceed and discuss further what is meant by doubtful accounts. Well, actually, doubtful accounts are a risk for the business. And in accounting, there is a concept that requires creation of an allowance in respect of known risks. So normally, businesses run this risk of default in recovery of debts. So businesses normally create an allowance in the accounts to meet any eventual default. So this allowance is created in the accounts for such estimated doubtful accounts. Now, there are two popular methods for creation of the allowance in the accounts. The first is allowance is based on certain percentage of sales. So that is what is the expectation that say 1% of the sales may turn into bad debt or they may default. And the other method is age analysis, whereby normally computers are used to classify the debt by months. And then the business decides as to how many months are termed as risk appetite, and anything over the risk appetite is termed doubtful, and provision is created for that period. So let us see how the mechanics works in the next slide. Let's consider the first method, whereby a percentage of sales is allowed in the accounts in respect of doubtful accounts. And what happens is that generally, year by year, the default or bad debt is listed down, and then it is estimated as to what could be a sort of average default rate, and that default rate is then assumed for creation of the allowance. And this has to be approved by the board of directors of the company. And you have to bear in mind that this allowance that is created in the accounts is an estimation. It is not an actual bad debt, it's only an allowance. Now let's take an example that Following this research into the past periods and the estimation of the allowance at the rate of 1% of sales, and if the sales are, say, $800,000, and then 1% allowance will be $8,000. So that is the estimation of the risk of non-recovery. So the accounting entries, a debit to uncollectible account expense and a credit to allowance for doubtful accounts. Now, referring to the example given, the accounting entry will be uncollectible account expense debit $8,000 and allowance for doubtful account credited $8,000. And a narration is provided that allowance for doubtful accounts created at 1% of sale for the year. So this entry is for the year, but normally every month this allowance has to be created. So we pick up the sales for the month and then take 1% of the sales as the allowance, and this entry is made to record that allowance. The other method is age analysis, and the allowance is based on this age analysis. But age analysis is normally provided by computers, and the firm decides as to what is its risk appetite. So the risk appetite varies from firm to firm. So one firm may say that anything over 1 month is risk. The other firm may say that anything over 2 months is risk. So the risk appetite varies, and anything over and above the risk appetite is considered risk, and allowance is created for that. Now, you can well realize that computers are generally used nowadays, and this report is generated on almost daily basis, and decisions are made on the basis of this computer report. Now, this is an example of age analysis, and this is a very short tabulation, but normally it depends on the size of the account receivables, and it can be a 2-3 page A3 size computer printout. But the idea is to give you some reference as to how the age analysis looks like. And you can see that the names of the firms are mentioned in the first column, and the balance, that is the balance in the account receivable, is shown besides the name of the firm. And then the amount that is within the 30 days credit is mentioned in the next column. And then the amount due over a month is mentioned in the next column. Then amount due over second month and amount due over third month is shown there. All that adds up to the balance that is due from the account receivable. So you can well imagine that this is the information that is provided by computers, because manually it may take a hell lot of time to come out with a tabulation like this. Now let us consider as to how the allowance is created based on age analysis. So if a firm estimates that its risk appetite is 2 months, then what it means is that any amount outstanding over 2 months is considered doubtful, and allowance is created for the remainder period. So that means that from third month onward, whatever amounts are due, they are provided in the accounts as an allowance. So Now you can see that the tabulation that was provided in the previous slide, uh, the the amount outstanding from third month onward adds up to $80,000. So that is the allowance that will be created in the accounts. Now the accounting entry, we debit uncollectible account expense $80,000, and we credit allowance for doubtful accounts $80,000, and there is a narration provided that allowance for doubtful accounts created as per age analysis attached. So you can attach the age analysis report to the entry, and then this will go into the accounts as the allowance for doubtful accounts. There is a related issue of bad debts, and that will be discussed in a separate presentation. I hope that you got fair idea as to what the allowance for doubtful accounts is, what are the methods to arrive at this amount, what the entries are involved, and in the next presentation, I will discuss the treatment of bad debts. In the meantime, I thank you and I request you to subscribe to my channel and click the bell icon. Thank you.